Mondays are for business. 25 minutes is what we have to do business here on Business Incorporated. And here's what we have prepared for you. As the meetings in Washington, D.C. ends, commendation, lessons to learn, we'll share all that with you. And there's a warning against fake farm inputs in Zimbabwe. A new level in Kenya as the capital market gets upgraded from restricted to pass. Welcome to the program. I'm Amy John Mekwa. Of course, this is Business Incorporated. We start from the global space where oil prices dipped on Monday, pressured by worries over a global glut as the U.S.-China trade tensions adds to concerns about an economic slowdown and weaker energy demand. So we look at the numbers for this afternoon. 0.5% in the red is what we have for Brent. $60.95 a barrel. WTI is more than that, 0.66% down, $57.17 a barrel. Oil traders' concern have shifted from undersupply to oversupply, and the futures contract structure of the global benchmark Brent shows this, that both benchmarks declined more than 2% last week, marking their third consecutive weekly decline, partly because of the International Energy Agency's outlook for a growing supply glut in 2026. And in metals, gold prices edged higher on Monday after a record rally supported by expectations of more U.S. rate cuts and safe haven demand linked to government shutdown in Washington, while investors are also awaiting cues from the upcoming U.S.-China trade talks. So for this afternoon, spot gold is up 1.28%. The price is $4,267.30. U.S. gold is also in the green, 0.1%, $4,275. Spot silver, 1.5% in the green, $50.43. Platinum is, however, on the flip side, as well as palladium. Both of them lost 0.46 for platinum and 2.25 for palladium. And yes, the meetings have ended in Washington, D.C. That's the IMF World Bank annual meetings. And the Minister of State for Finance from Nigeria says that she observed deep optimism about Nigeria's trajectory and the renewed confidence of the country's global partners. She notes that over the week, the Nigerian team engaged multilaterally and bilaterally from meetings with the Islamic Domestic Development Bank and the World Bank's Managing Director of Operations, even up to the G24 and Coalition of Finance Ministers for Climate Action. Across all forums, she says that there was a consistent acknowledgement that Nigeria's reform agenda is yielding results, which include inflation moderating, the exchange rate stabilizing, investor confidence returning, and foreign reserves strengthening. Her observations conclude with the task ahead to deepen reform, unlock private investment, and ensure that growth translates into prosperity for every Nigerian. More recommendation now to Ghana. The director of the African Department at the International Monetary Fund, Abebe Selassie, has commended Ghana's recent progress in stabilizing its exchange rate and for adopting a sound foreign exchange management framework. As a step in the right direction, Mr. Selassie explained that Ghana had moved from a period of uncontrolled depreciation and market anxiety to a more stable macroeconomic environment marked by declining inflation and renewed investor confidence. He was speaking during one of the press conferences at the meetings, which ended over the weekend. And Mr. Selassie states that while the recent appreciation of the cedi reflects improving economic fundamentals, it was crucial for policymakers to maintain a delicate balance between price stability and external competitiveness. He cautioned that excessive interference in the FX market or an overvalued currency could undermine the competitiveness of Ghana's exports even as stability has returned. The IMF's Director of Africa expresses optimism that Ghana's exchange rate framework and prudent fiscal measures were setting the stage for a stronger economic recovery as the country prepares for life beyond current program expected to end last year. And talking about Africa, our correspondent in Washington, D.C., Maria Bird, put something together, getting some of those high points of conversations that has to do with Africa.
The 2025 annual meeting for the IMF is underway as there's much talks around free trade, fair trade, and funding that's going into the global economy. Specifically looking at the wars and peace, how those are having an impact on the international trade relationships. Additionally, there's much focus on Africa and the growth and how the expansions. While there are some that are here protesting, there are many that are focusing in on how to grow the economy across the globe.
During the press conference on Africa, the impact of U.S. tariffs and the large-scale expansion on the continent, while also giving context to concerns around inflation in Nigeria.
And external financing conditions have improved somewhat, allowing a few countries, Kenya and Angola most recently, to access international capital markets. The global trade and policy landscape has also deteriorated. Tariffs on exports to the United States have increased, and preferential access under AGOA has expired, while the direct exposure of most countries to the U.S. is limited. Broader trade policy uncertainty is weighing on growth. Important to note that several countries in the region, Benin, Cote d'Ivoire, Ethiopia, Rwanda, Uganda, are among the fastest growing economies in the world. However, we still have quite a few resource-intensive countries and conflict-infected countries continuing to face significant challenges with only modest gains in per capita incomes. So starting with inflation in Nigeria, I mean, we find the decline in inflation consistent with the tightening of policies that have been undertaken in recent years, particularly on the monetary policy front, but also the effect of the exchange rate adjustment that took place over the last year or so and more, having come through the system. So it is consistent with the policy calibration that we see. We're encouraged by it, but I think still some ways to go to get to the government's target.
While discussions on international trade and economic vulnerabilities were being discussed within the annual meetings, protesters filled sidewalks outside calling for action from the IMF.
She became president by default because the president died. Now she's out killing the citizen. The president of Tanzania, because she's kidnapping.
We had so much hope when she just first came to power after we had a very brutal authoritarian government. But I think that the government is the same. It's the same people. They've been in power for over 60 years. I think they've become complicit. They've come numb to the suffering of Tanzanians. So I'm here to tell IMF that their funding is not going where it should be going. Their funding is going to fund these enforced disappearance. And the funding is not reaching the majority of Tanzanian people.
The IMF annual meetings were held for 6 days in Washington, focusing on the monetary growth and challenges that exist throughout the world, while also being faced with opposition from protesters. From Washington, Maria Bird, Channel Television News.
All right, let's leave Washington. We know, of course, the conversations and the outcome from those meetings will still be forming conversation. But for now, let's head to Zimbabwe, where as preparations for the 2025-2026 summer cropping season reaches an advanced stage, farmers have been asked to be on the lookout for fake agricultural inputs. Over the years, some farmers' crops have been severely damaged after using counterfeit seeds and fertilizers, as well as chemicals. The Ministry of Lands, Agriculture, Fisheries, Water and Rural Development Permanent Secretary, Professor Obert Jiri, is asking farmers to desist from acquiring agro inputs from unregistered agro dealers. And a South African court has nullified the environmental authorization for state-owned electricity utility Eskom's proposed 3,000 megawatt gas-fired power plant. The court cited multiple reasons for its decision, including the failure of adequately consulting local residents and considering the full impact of the power plant's entire life cycle on climate change. ESCOM aims to build a natural gas power plant in the state-owned Richards Bay Industrial Development Zone in the country's KwaZulu-Natal province. Groundwork and the South Durban Community Environmental Alliance had challenged the project at the Pretoria High Court in 2022, arguing, among other points, that the project's greenhouse gas emissions were inconsistent with both South Africa's commitment to decarbonization. However, the judge ruled in ESCOM's favor. Both non-profits then challenged the High Court's ruling at the Supreme Court of Appeal, and now they have a success. Kenya's capital markets received a major boost after the Nairobi Securities Exchange was upgraded by the FTSE Russell Index Governance Board. The board upgraded the NSE from restricted to pass on the efficient trading mechanism criterion. According to the NSE CEO, Frank Nwiti, this is a significant milestone and an endorsement of the modernization taken in the country's financial markets reforms. The improvement comes after a key policy shift that allows securities listed on an NSE to be traded in multiples of one share effective August 1, 2025, a move expected to deepen market participation and boost liquidation. Here in Nigeria, stakeholders from government, industry, and academia have gathered in Abuja for the 2025 SCIBI's annual conference. It's a convergence aimed at strengthening collaborative ecosystems for sustainable innovation and economic growth. The conference, which brings together top policymakers, industrialists, researchers, and students, seeks to find homegrown solutions to Nigeria's pressing challenges in the oil and gas, education, and technology sectors.
The success of any nation depends not only on agile, efficient.
At a time when Nigeria is seeking new pathways to economic recovery, innovation and collaboration have become key drivers of growth. This year's SCIBI's annual conference is setting that agenda, linking industry, government, and academia under the theme Strengthening Collaborative Ecosystems for Sustainable Innovation and Economic Growth. Speakers at the opening session emphasized the need for a stronger national innovation system that aligns education and research with real industry needs, particularly in the oil and gas sector, where local content and digital transformation are redefining competitiveness. General Manager, Nigeria Content Development and Monitoring Board, Dr. Abdulmalik Halilu, highlights how NCDMB is deepening collaboration between government, academia, and industries to localize technology and build human capacity.
When we were developing the local content implementation strategy, we realized that there's a nexus between gross domestic production and research. And the essence of local content is produced locally for the Nigerian local content, Nigerian market.
The Chief Executive Officer, Cypher Crescent Limited, Thank God Egbe, notes that data-driven solutions can transform Nigeria's oil and gas operations.
So if we're able to get our data democratized and get processes put in place, we'll be able to achieve that. So technology is the foundation of what we want to look at.
From the academia perspective, Professor Eukaria Nwaichi stressed that the triple helix model, linking universities, industry, and government, remains the fastest route to bridging the gap between research and commercialization.
So they can do this, they can do the acceleration by first fostering co-creation. Because in this model, we have the academia, industry, government, investors, and even community in the fourth leg.
On the continental front, Dr. Rose Oronje of the African Institute for Development Policy emphasized that science communication and evidence-based policy making are essential for building Africa's innovation ecosystem.
Whatever is coming out of research, out of laboratories, out of innovation programs is communicated in a way that people understand, those will benefit from it, but also governments understand, and importantly, they integrate it.
As Nigeria continues to navigate its path towards sustainable development, Conferences like these highlight the power of collaboration between research and industry.
Let's get to the markets now, starting from Nigeria, where we see a continuous momentum in the green zone. The NGX this afternoon has hit 149,748.50. It's up 0.52% at intraday. And then for Johannesburg, it's 0.19%. In the green, also 110,945. Egypt intraday is green, 38,044.09. And Nairobi, the celebration we just told you about, their upgrade right there. So, of course, we expect very green color, but this is Friday's close. So I wonder what we will have at the close of market today, seeing that the news is what's trending in that market in Kenya. So it closed 2.41% at 176.39. Moving away from Africa to the Middle East, where we see mostly negative in major markets at intraday from Dubai, where we have 0.18 in the red. Abu Dhabi, we have 0.07. Saudi, 0.30. And Qatar, 0.23. All the markets in the Middle East are red at intraday. We move to the United States. Stock futures moved higher on Monday as investors turned their attention towards a slew of big name earnings reports as expected. Also, there's the expectation for inflation numbers. I believe that's on Wednesday from the United States. And so we see at this time that the Dow is 0.2, S&P 0.28, Nasdaq 0.36, a recovery obviously from what we had on Friday, where we saw a lot of uncertainty at the meeting between China and the US and the trade tension still going on. So we see that there's been a recovery, perhaps renewed hope, renewed hope of Nigeria spilling over to the markets in the United States. So I'm going over to Asia now. Markets were in the green on Monday. Investors passed with the latest slew of economic data. We told you about the China data. Even though it's a drop, it was within the expectation, July to September compared to a year ago. And so we see the Nikkei green, really green, 3.49. Kospi also, we talked a lot about South Korea earlier today during business morning, 1.76. Hang Seng, 2.42 there. China driving the sentiment around the market. Let's see the other part. Shanghai and Nifty 50 of India, in spite of the threat from President Trump. We'll see how they settle that matter. Will they keep on buying crude from Russia and risk sanctions and paying tariffs? Or will they be friends with the United States and look elsewhere for crude? We'll see that with time. But the Asian market is green this afternoon. Let's find out what's going on with the European market with Lars Holter. Hi, Lars. Good afternoon. What's the market looking like at this time?
Yeah, good afternoon, Ini. Well, markets here are looking up at the beginning of the trading week. We have the DAX up over 1% right now. Now, of course, you remember last Friday with a down day, worries over possible banking crisis in the U.S. And then, however, we saw that markets there in the U.S. won back their losses on Friday. So maybe all of that fear was a little bit overblown, and markets here now in Europe are recovering too, of course. And then there's some data out here as well. Housing and construction seems to be doing a bit better than expected. And, Ini, we're also seeing producer prices down a bit. Now, that would mean that maybe we're getting inflation to go down a bit, certainly helpful for consumers, and markets are liking it right now.
Yeah, but it's not going down. For Germany's favorite beverage, we hear the price is actually on the opposite side.
Yeah, with beer getting more expensive here, one could think it's only inflation because, of course, aside from the latest numbers here on producer prices, actually inflation is a bit higher still than the 2% goal that the ECB would like to see. However, when we're looking here at the Germans' favorite drink, there's actually a whole different factor at play. Germans are actually drinking much less of it. Brewers are saying that stores are seeing 2% less in beer revenue, and it's a much bigger drop even in restaurants restaurants and bars, where consumption is down almost 10% this year over last. And that is partially as Germans are trying to get a bit healthier. But general inflation is really playing a role here. It's very interesting because it's this kind of day-to-day problem as people are experiencing higher prices, especially for groceries and such items. Now, we are seeing that it hurts in their wallets, and restaurant owners, for example, telling us that people are drinking less, drinking one beer instead of two, just to save a little bit of money. And all in all, this has a tremendous effect, of course, on the business. A business that used to look solid as beer in this particular example is pretty much ingrained in German culture. But breweries have now for years seen their revenue drop. And with these planned price hikes that they are going for now, they're trying to at least reclaim some of their income in their business.
Yeah, last, because I was going to say, I mean, we know beer is Germans' favorite beverage. Is there an alternative coming the way, or people will just reduce this consumption sustainably?
Well, that's the question, really, what's going to happen? Because, of course, if you hike the price, people might drink less. And that's why it's going to be really interesting to see when these higher prices will actually hit consumers. Now, 6 of the 10 largest brewers in Germany are saying that we'll have to raise prices in the next couple of weeks. But looking at stores, we are hearing that people will not just pass these on to consumers because they are afraid, of course, of a negative effect. Especially now, analysts are saying that most retailers will hold off on raising prices at least until Christmas, so as not endanger their seasonal business towards the end of the year. In the new year, however, prices might go up, and then we will have to see if savvy consumers will actually just go for discounted rates whenever they have a special sales offered. Fact is, breweries in Germany now are experiencing difficult times between the growing wish for Germans to be healthy and the general inflationary trends.
Yeah, we'll certainly see. We'll follow the numbers and see what happens after Christmas and all of that. But thank you so much, Lars, for bringing this to our knowledge.
Thank you, Ini.
So let's dash over to the crypto space and see what's happening there. Last week was a bit downtime for Bitcoin. We saw it close on Friday at 111,000. I wonder if there's a recovery coming on this week. I just wonder. But let's see the top stories making the headlines in the crypto space. We hear that BlackRock has officially entered into the UK retail crypto investment space with the launch of its first Bitcoin exchange-traded product as the ETP on London Stock Exchange, marking a major shift in how everyday investors can access digital assets, and the move follows a policy change by the Financial Conduct Authority, which lifted restrictions on crypto-backed exchange products for retail investors. That's BlackRock. And then in the United States, we hear that Ripple will not be included in Federal Reserve's upcoming conference. Should we be worried? Is this a big deal or not? The conference is to explore payments innovation and digital transformation trends, stablecoins, tokenization, artificial intelligence. They're set to dominate key discussions there. But Ripple's absence seems to be sparking some debate. Let's talk to Olumide Additional joining us here. Hi, Olumide. Good afternoon and welcome to the program.
Yeah, thank you for having me. It's been a while.
Is this a big deal? Should we be worried? There's a debate going on, but does it move anything?
I think the ascension of Bitcoin in the digital space has been positive, and I'm not surprised with the fact that we are seeing traditional presence in that space. But surprisingly, it seems that there are still some bottlenecks in the crypto space, particularly in the case of Ripple. You recall that Ripple has a very popular altcoin known as XRP that is popular used for remittance. And the fact that the US Fed is having a payment conference and Ripple is not there tells you how traditional finance see the threat of digital payment. But long scale, I think looking at the market, the fact that Bitcoin has reclaimed the 110 support level, Ethereum is back above 4,000. XRP is looking to reclaim the 2.5 support level tells you that liquidity is still coming in play, but the market still looks very, very fragile.
Mm. And the conference is actually tomorrow at its headquarters, but the Fed has also said that they'll be streaming it live on their website. So, I mean, anybody can join in. But you talked about how Bitcoin has been able to retain the support level of 110,000. We hear Russia and US presidents maybe meeting to talk about Ukraine, China and US. That's also a meeting that we're looking at. Do we see any major factor that could move Bitcoin one way or the other in the next couple of hours or days?
Yeah, definitely. President Trump has been the elephant in the room. I recall that the flash crash that occurred a few weeks back was because of Donald Trump's surprise announcement of tariffs on China. And you know the dynamics, what tariffs play in the digital space. So I think the elephant in the room definitely is Donald Trump, how he plays out with China. Any negative news from that part will definitely take up Bitcoin's upside. At some point, it looks like Bitcoin was going back below 100,000. However, the weaker dollar, appetite for risk, so much money in circulation, increased appetite for digital assets as proponent giving Bitcoin that's some form of safety. So it's unlikely we see Bitcoin dropping below 75,000, the worst case scenario. But I think the best case scenario for Bitcoin is really coming above the 125,000, slightly above 125,000. And that's because of the tariffs that are still looking in play.
All right, Olumide, thank you so much for pointing us to that direction. Although in the midst of all of this, gold is thriving. We've seen it hit record highs, maybe two in a week, at least last week. Well, thank you so much, Olumide Additional. Good to have you on the program.
Yeah, thank you for having me. Have a nice day.
You too. All right, so that's it on the program. Thank you so much for being a part of Business Incorporated. It's a fresh week, so the journey has just started. We have a whole lot lined up for you. You don't want to miss it. Tomorrow, 10 a.m. Business Morning, and I'll be back at 1:30 tomorrow for Business Incorporated. I'm Ini John Mekwa.